In a recent forum where I was as a panelist, World Bank and the IMF acknowledged that among the countries in our region, the Philippines is the most vulnerable in the ongoing trade war between the U.S. and China. Remember, although we are a net importer, exports a major component of our economy, and 16%, they estimated that 16% of our outflow or shipments to both countries will be affected. Remember, we are building or we are preparing inputs to for the semiconductor industry, the electronics, you know, the components that are being subject now of the current trade war. So if they are imposed higher tariffs, the sales of those finished products will affect the orders of those companies. Remember, we are still operating on the current year orders that were made last year before the trade war. So everything that we are seeing right now are preparations made on projections without the trade war, without this kind of inflation, without this kind of depreciation, and therefore the full impact of will be felt next year. But right now, I think we're already going to see that.
We, as you said, we're not an exporting country. Okay, there's the other upside. I mean, assuming that Trump will win his second term, so he will be putting this pressure on China for the next 6 years. Okay. The upside is that some of the SMEs in China are looking to the Philippines. You remember President Xi Jinping is coming November. Okay. And I think that would be one of the topics. They could set up factories here. I'm not saying that, you know, I'm for the battles of the giants, because somehow, you know, you have this big economy fighting. The world gets affected. But what I'm saying is that if this extends in a prolonged period, we might have an upside to it.